Welcome back. Treasury Secretary Steven Mnuchin is now tweaking his timeline for when Congress might be able to pass tax reform. Here's what Mnuchin had to say while speaking to the community bankers in the nation's capital yesterday.
I originally said that I was hopeful that we would get tax reform done before the August recess. At the time, I said it was aggressive. I guess you'd say it's even more aggressive now. I've decided I'm not going to give any other specific dates other than saying we'd like to do this as soon as possible. We probably agree upon 80% of the details. We got the last 20% to figure out, and we're committed to trying to get this done fast. So I'm hopeful that this gets done this year.
Joining us right now to talk more about that is EY, America's Vice Chair of Taxes, Kate Barton, with us this morning. Kate, good to see you. Thanks so much for joining us.
Thank you, Maria.
So you said 80% they agree on. That's good because Paul Ryan in the House has a plan, and there are similarities. They both want simplicity and transparency. What do you make of the plan and the timeline?
Well, I'm hoping that it's going to happen by year end. That's what the goal is, and I think that we'll see a lower tax rate and base broadening. So, you know, in a nutshell, that's what everyone is striving for.
Yeah. So, Kate, as you know, talking to all my CEO colleagues, your phone's got to be ringing off the hook here, asking for advice. I mean, what are you telling corporations and CEOs based on what's been rolled out so far?
Sure. So we're telling them that they should continue to model out each of the proposals when they come out so that they know the impact for their company. They have to figure out how they're going to get their voice heard because everybody is looking for companies to really weigh in Congress. And then third, a lot of them are very focused on no regrets planning. So this is an all-time high tax rate, and what can you do right now to make sure that you maximize that so you're ready when the rates go lower?
And how about the small businesses, people like me, you know, that have subchapters and LLCs? How will they be affected by this? Well,
right now the proposals are all holistic, so they deal with pass-throughs as well as individuals and corporations, and I think that's really important. 90% of business is done in flow-throughs in the United States, and so that's important. 90%, 50% by income, but it's still a significant piece, and so it has to be holistic.
It really helps equalize their competitiveness in their markets.
It levels the playing field for smaller businesses in a way that no president has stepped up to do in modern history. I think that's, I'm not exaggerating it when I say that.
And that's where the job creation is, small business. So this really does represent a boost to overall economic growth.
It will. I'm curious, Kate, like how much will it help job creation? How much could it potentially lift people's incomes in this country by targeting corporate tax rates?
It does a lot. I mean, the statistics show that if the rate goes down and it gets simpler, it will definitely create jobs.
Now, we all agree that 15% is probably not going to be the number for the corporate rate because Paul Ryan's at 20%. And there's got to be some wiggle room when they negotiate here. So we are expecting that the corporate rate goes to 20%. But what about the pass-through rate? What about these small owned and operated businesses? Do you think they're going to still be at 15%, which is what Donald Trump wants?
No, I think that, you know,
that goes to 20% too?
Yes, and it could even be a little bit higher. 25% was contemplated in the House Republican blueprint. So just to, again, make sure that people are not manipulating the choice of entity.
And what about manipulating it? I mean, you know, how do you make sure people don't game the system, that everybody just doesn't turn into an LLC?
There'll have to be rules on what is really income, what's retained earnings.
Are you a business?
Yes, exactly. So.
Kate, let's talk about $2 trillion offshore.
Actually, Donald Trump says it's $5 trillion.
Okay, well,
he told me 2 weeks ago, look, you keep saying $2.5 trillion, Maria. It's $5 trillion. It was $2.5 trillion 5 years ago, he said. That's what the president said.
I saw that interview. He always thinks big. So whether it's between 2 or 5 trillion, how
2, 3, 4, 5.
Right, it's only trillions. How will that be handled with this proposed tax?
What's contemplated right now is that there'd be a mandatory repatriation as we move maybe from a worldwide system to territorial. And so that means there'll be a toll charge on those earnings coming back. The rate could be somewhere 3, 8, or 10%, but companies are preparing for that right now.
Yeah.
Steven Mnuchin said that I said, is it 10%? Is it 12%? Or is it 8%? He said you're in the right neighborhood. That's right. He said 8, 10, or 12%. Listen, let's talk about that. The rate right now is 35%.
Yeah.
And they're going to 10%. You have to believe that companies take that money back to the U.S.
Right.
Look at what Apple has. $250 billion of cash, Apple.
And
now
90% of that's overseas.
And let's talk about that. Apple talked about $1 billion for job creation. I think one of the things we should include in that repatriation is a certain percentage of that money has to be incremental to the current corporation's budgets for job creation, and they ought to be able to track it to make sure it's coming back and being redeployed into job creation into our country, along with infrastructure.
Infrastructure is key.
Yeah,
absolutely.
Don't you think, Kate?
It really is, and I think there's a lot of different things, public-private partnerships to really get the infrastructure going in this country. That'll be key.
Yeah.
And do you think the growth is going to be enough to pay for all this?
Well, it depends on the rate. I think 15 is going to be hard, but if it's in the 20s, it mathematically could work out.
It's hard to know how much it actually costs. So Maya McGinnis said that it's either $3 to $7 trillion. I mean, $3 to $7 trillion in terms of the cost of the tax plan. We don't know what deductions are going to end up on the cutting room floor. We just don't know the details. So how do you know how much it costs?
We don't even know the income brackets for the individual income taxes. So.
Right. Yeah. There's a lot of negotiation to come.
Yeah. But we know that it's 3 brackets is what the president wants. That's 10%, 25, and 35%.
That's right.
Well, you guys do a great job. So you're right at the center of this discussion, Kate. So it's good to have you on and to be able out there to advise these corporations.
Well, thank you.
It sure is. Kate, great.
Thank you.
Thanks so much for weighing in this morning. Kate Barton, EY there.